E.G. Tax.
Hi, I'm Esther Golias, the tax lady from E.G. Tax, and if we're talking taxes, you know it's tax season. Welcome to our weekly show here on WBBZ, where we're going to answer your tax questions, and at the end of it, you're going to be so smart. And I'm joined in studio with Tiffany Fabian.
Hey there, Esther.
And she's our Vice President in charge of operations, and Christopher Fabian, he's our Vice President in charge of taxes. So
Hello, Esther.
thank you guys, and we are the brain trust of E.G. Tax. And by the way, if you have any questions during the week, in between the show, and of course we have our radio show on Saturdays.
Yep, from 3 to 4.
WBEN, from 3 to 4. You can go to our website anytime, ask a tax question, and one of the three of us will answer it because we want to help you. And don't forget, we're doing this because we love you, and E.G. Tax is here to help you. Stay tuned. We're going to be here with your questions.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. E.G. Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
I'm Esther Golias, the tax lady from E.G. Tax. We have 30 area offices open right now to help you. By the way, the most sweeping tax law changes just took place. So when you're taking a look at your own taxes and you go, oh my gosh, what happened? Baby, you have no idea. On the federal, you got one set of rules, and the state of New York is kind of mad at the federal, and they got another set of rules. So you think it was complicated before it really is, and we're going to help you. And I got Tiffany Fabian, Christopher Fabian. We want to help you, and we got Dom, our roving reporter, out in the field with your questions. And Dom, what's our first question?
Hey Esther, I just got a text on my phone from my friend, and she says, my 22-year-old son is in college, but he made $7,000 last year and wants to claim himself on his taxes. I have paid for almost all of his housing and part of his education, but he took out the balance of the student loans. I said I should claim him. Who is right?
Okay, so this happens all the time.
Yep,
Guys?
yep.
So the kids sit around the student union, and the kids all say, "We want the refund." And the truth is, if the family likes each other, then then who's the benefit?
It should be the son. It should be the parents who claim the son, because the truth is, part of that American Opportunity Tax Credit is a non-refundable, and part of it is refundable. And actually, a child under the age of 24 isn't entitled to the refundable portion. So
Unless he lies.
Right. So the parents should be claiming the son.
And the refundable portion maximum is $1,000.
It's $1,000
right?
plus.
But the parents.
Right, the parents get the full $2,500. Depending on their income, the $1,500 non-refundable, the $1,000 refundable,
plus the new $500 family credit for having someone in their house over 16,
Plus the state of New
Cha-ching.
York.
plus the state of New York.
So we're talking about
25,
$3,400,
yep.
right?
Whereas the kid was $7,000
If he
has
lied,
no, right,
Would be 1,000.
right.
So if the kid lies, the kid gets 1,000, but if the parents do it right, the parents get 3,400. So, assuming parents have taxable income. So in that case, the family would benefit by an additional $2,400. So if you want to be fair to your kids, and because you're really making a stink out of it, what should the parents do?
I always say bring in your child with you and I'll show you the answer both ways. And so the kid, the son, in this case is with them and we'll show you the answer this way and that way as a family. And the son will go, and then the parents could maybe give him a little bit of their
Right,
refund.
right. Of course, then at that point, the parents go, well, I don't know, gave them, which is true, but I mean, if we really want to have peace,
Right.
and even though the kid had a
Harmony.
student loan, that
It
doesn't
doesn't
make
matter.
any difference,
Does not matter.
right?
Yep.
Okay, so, all right?
Yep.
That's
All right,
good.
Back to our roving reporter, Dom, what do we got?
Hi Esther, we have another email question for you. My mom lives with me. I am single. She only has Social Security to live on and only gives me $400 a month for food. Can I claim her on my taxes?
Okay, so, the single person would really care.
Yep.
Why?
The single person would care because they get to claim head of household.
That's
And so
exactly right.
that's huge, huge.
Because what happens with these filing statuses? They're single, head of household,
Married.
joint, married, separate, and widow with dependent child. Why do we care about the filing status,
Be-
Chris?
Well,
no, Chris.
Okay, first of all, single, your standard deduction is $12,000 this year. Head of household, it's $18,000. Married filing joint, it's $24,000. So it's an increase of a fraction of income
Right.
to start off with. But then the tax rates are a little bit different too, depending on your filing status.
Right, so the changing from a single to a head of the household, you get the benefit of an extra $6,000 write-off
Right.
and a larger field of income at a lower tax rate.
Correct,
Right?
right.
So that's really important.
Right, and then if he could claim mom too, or she, you were talking again, like the first question, that $500 family credit.
Right, so, and which is brand new this year, by the way.
Correct. Yeah.
So the $500 family credit used to be that you got personal exemptions. Now you don't get personal exemptions anymore. They replaced that personal exemption for children over the age of 17 or other qualified dependents at $500 per qualified individual. So that's a brand new credit this year. But it's really important. And since all mom has is $400 a month.
No, that's what they give her.
Oh, so we have to find out if
You have
we
to
have
do
a
support.
support
worksheet.
statement.
You have to
right.
do a support worksheet to see if they provide more than 50% of her support. And that's really where the money would lie.
Right, and so in your total support, you figure how much it costs for mom to be on this earth, correct?
Right.
And if they gave more than 50%, 50% and one,
Right.
So the
then they
ans-
could claim her as a dependent, which would be really good
So
for
the
them.
answer is, just like Esther
Yeah.
said, potentially they could claim her
That's
as a
exactly,
dependent.
and it's really important.
Right, but you
I'm
gotta-
Esther Golias, the tax lady from EG Tax. We're gonna take a short commercial break. We'll see you on the other side. We're gonna make you so smart. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family. Why is it when we think of our family, we always do what's best for them? Like when there's a problem with your kid's teeth, you call the orthodontist. Problem with the car? Call the mechanic. So why, with the largest tax law change in decades, would you even think about preparing your own tax return yourself? A mistake could cost you thousands. EG Tax has studied these tax law changes since their inception. We're going to work hard to make sure you get the biggest refund possible this year. Come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call RJ Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let RJ Gullo Companies put their 40 years of experience to work for you. Call RJ Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
And of course, this is tax season. We have all 30 of our offices open to serve you. Our website is egtax.com. I got the Brain Trust here, and we're helping you with your tax questions. We have Dom, our roving reporter, out in the field. And Dom, we have somebody else that's got a question.
Hey Esther, it's Dominic again in the McKinley Mall. I'm here with Ciara and Peyton, and they have a question for you.
We own a second home under tax reform. Can we claim the taxes and interest we paid?
Okay, so, of course, under tax, this was the most sweeping tax law changes in history. And I will tell you, when it's time for you to do your tax return this year, you're going to have one set of rules for the federal and another set of rules for New York State. And you might say, I won't bother with New York State. Well, look if you end up with an extra $10,000 in write-offs, it saves you $700, $800. I mean, I'd never throw away $700 or $800, right?
No.
But this is one of those things that under tax reform, it used to be that your interest that you paid on your primary and secondary home, including home equity interest, was fully deductible, right?
Right.
What's the change?
And so taxes, that caveat on the Schedule A is limited to $10,000. We call that SALT, state and local taxes. That is limited to $10,000. And you can only take your property taxes for your primary residence. So this person would get to take the property taxes on the federal for their second house.
But how about the interest?
The interest they could take on the state for both.
Well, they can, on the state, they can take the property taxes on whatever, there's no limit.
Right.
On the federal, it's going to be limited to primary and secondary.
Right.
Right.
Yep.
The interest
Up to
is going to be deductible, and that's going to be up to that $10,000 cap.
the
On the
taxes.
state of New York, it's A-OK for the taxes. For the interest, this year, it has to be acquisition indebtedness, right?
Right.
Or remodeling indebtedness on your primary and secondary home. So, but on the state of New York, it's A-OK. You can take whatever you paid that's tied to your primary or secondary home.
That is just really confusing.
So it really is confusing. So what are we saying?
So property taxes on the federal, limited to $10,000.
Right.
Including your state tax withholdings or
Right.
your estimates.
Right.
New York State, you could have $40,000
And you can write it off.
You can write it
the
off.
old law.
Right. On the, as far as interest on the mortgage, primary and secondary indebtedness and remodeling on the federal only, and on the state of New York, whatever you did that's tied to your personal residence, secondary residence, home equity as long, for whatever you used it for, if you used it for education. So there's no limit on the
And
state
then
of New
don't
York.
forget, on the federal, the standard deduction is higher, so it's gonna be a little bit more difficult to get over that hump than it would be on the state. But I have to have this conversation, for a single person, it'll be easier to itemize than it will for a married couple.
That's exactly,
Yeah.
and I will tell you, if there ever was a year to be divorced, this is, under tax reform, it absolutely is murderous
For a married couple.
for a married couple. It's better to be
Great.
single. And all the single guys out there saying to their girlfriends, I told you. All right, what do we have, Don?
Hi Esther, we have another email coming in for you. This one says, my husband is in a nursing home and right now we pay for everything. Last year it cost over $100,000 to keep him there. Is there anything I can deduct?
Oh, for sure. You want to address that question?
Sure. Nursing home is a legitimate medical expense. So hopefully last year you used that on your itemized deductions under medicals, because that 100,000 was limited to 7.5% of your income. So definitely that puts you way over. And by the time you add in your prescriptions, his prescriptions, the transportation, doctor's visits, hospital visits, all that probably would eliminate most of your federal income where you should have got all your withholding back.
Right.
Which then also, that flows over to New York State as an itemized deduction, but also on New York State, there is the refundable credit for the nursing home assessment tax.
Now, let Tiff talk about that, because she loves this credit. All right, what's
Yeah,
your, Tiff loves
and
this credit.
So every nursing home, if you are a private pay person, charges you a tax. It's called the New York State Assessment Tax. And so all of that credit is some money that you will actually, sorry, that tax you pay will all be back to you as a refundable credit on the New York return. Is it a 928, Chris?
No, the New York.
I thought it was a 983.
No.
Whatever.
That's in federal.
So it's a New York State assessment tax, and so whatever you pay to the the nursing
240.
home as a tax, you get back to you money in
But
your
again,
hand.
and if you don't do the form, they're gonna keep the money. So if you're a private pay patient, or if you're paying private pay patient, on the state of New York, then, you get a refund of the bed tax assessment that they're charging you, but only if you file the form. And it's a lot of money. It's 6% on 100,000. That's $6,000. I
Right,
mean,
right.
that's money you have coming back. So,
And New York
so
State-
yes, it's deductible. Yes, you get the
Yeah,
tax.
and New York State might be like, shh,
And then here's the
don't
other
claim
thing,
it.
if you're paying a whole bunch of money in medical, like for a nursing home, what might else a taxpayer do? They have all this big itemized deduction. They could probably take more money out of their 401k
Yeah.
plans or
Yeah,
out of
yeah,
their IRAs. And that's a little tax planning that you'd want to do, but because you have such a large deduction, take more out of your IRA, because you'll be able to do it tax-free.
Yeah, so I
Right?
would say the person who's in charge of their money or their estate, they should really call and ask questions, because.
Or you can call EG Tax, because
Yeah.
we'll help you at no charge,
Yeah.
right?
And if you didn't take the medical costs last year, do an amended return and
Yeah.
get that money back.
That's exactly right.
Because you have 3 years to do that amended return.
Absolutely right. Okay, so we love helping you. All right, we got Dom. What else we have out in the field, sir?
During a hurricane in North Carolina, I had a $300,000 house totally demolished. Is there anything I can do tax-wise, because I only got $150,000 back?
Okay, of course, casualty losses are still in effect, even under tax reform. And as long as it's a federally declared disaster area, which I know it was, then you qualify for a casualty loss, which would be the fair market value just prior to the casualty, the hurricane, less what it was worth after the hurricane. So if it was worth 300,000 before, if it was worth 100,000 after, because the land has a value, that's a decrease of 200,000. If they got 150 from the insurance company, then they end up with a casualty loss of about 50,000 less the 10%
Yeah.
adjusted gross income.
And then I just want to talk about, I have some clients who took advantage, or sadly, of the Lake Ontario casualty loss, and I've been getting phone calls in the summertime because they actually
They
got
got money.
back. Yeah.
state really did cough up with the
state
cash.
really did cough up
It only
with the
took them a
cash.
year, but they did do it.
And so they wanted to amend their 2017, and I said, no, that's an event
And when you
that
get
we're
the
gonna
income.
do
Right.
on their 2018
Right,
return.
right. So anything on the casualty we should
No,
talk
you
about, Chris?
just gotta remember, like you said, the only time you can claim casualties now is on a federally declared disaster.
But not on New York State.
But not on New York
On
State.
New York State, you can do it. So, I mean,
But what this means is, if your house burned to the ground, hate to
Right.
say that, but that does happen. On the federal, they say, we don't care.
yep,
Sorry, you lose.
Right.
But on New York State, they're gonna let you still take
Right.
the casualty.
so what you're seeing here is that the federal government, because they stepped up the itemized deductions and eliminated the personal exemptions, they're saying, okay, so we're not gonna let you take this, we're not gonna let you take this, we're not gonna let you take this. And the state of New York kind of said, well, gee, because this is a high tax state, our people are really getting chopped in the neck, right? So the state of New York, to counterbalance this, they said, well, great, we're going to let you take everything that the federal government is not going to let you take. So in effect, you're going to have to do 2 separate tax returns with 2 completely different sets of rules, and the state being very liberal, the federal not so much.
And in that same vein, I want to say to everybody, I'm advising everybody, because I get so many letters from New York State, they're going to be holding the purse strings. So make sure you keep very diligent records of all of
You
your
mean the
expenses.
state of New York is holding the
The
purse
state of
string,
New
yeah.
York is holding the purse string, so keep track of all of your expenses and all your receipts and really keep fastidious track of it. And more than anything is, I would adjust your withholdings to New York State. I know that Chris and I adjusted our withholdings on our New York State paychecks. and
Because
so
what happens
really-
is New York State sometimes holds on to that money and they say, okay, if you can prove it, we're gonna let it go. And they kind of don't want to let it go. So sometimes you have to go through this onerous proving of the deduction. So that's why Tiffany's saying, keep good track.
Right.
And if you have a problem, come see us because we are definitely akin to what the state of New York does, right?
Yeah.
Yep, especially, you know, their W-2 letters, hopefully they won't do that again this year, but I have a feeling it will be worse. Also, people.
Well, explain what the W-2 letter is.
Last 3 years, New York State's been coming out saying,
Withholdings.
we need proof of your withholding. We're gonna hold your refund until you prove your withholding, whether it's through your W-2s or through your retirement accounts. So
And
you're
then they
thinking
hold
you're
it for
waiting for
several
your,
months.
yeah,
Sorry.
you're waiting for your $500, your $1,000, your $2,000 from New York State, and they're gonna mail you this letter. That delays that refund 120 days. So then they can come back and say, oh, we never got it. Send it again.
Which is
could-
another 120
days.
Sounds like we've seen this
So, I
before.
mean,
Yeah.
it's like a little game. You feel like you're playing like tax refund billiards here. And that's why if you adjust your withholding so that not so much goes to New York State, then you're in the driver's seat.
Yep.
You know, you're not waiting for your money, at
Especially
least.
because now you have more of a propensity to itemize in New York State, whereas the federal, you're leaving it
That's
alone.
exactly
You
right.
really gotta take a look
So,
at New
so
York State.
let's recap. With tax reform, yes, you got a larger standard deduction.
Yep.
All right? If you're single, your standard deduction is 12, married joint is 24,000, but you lost your personal exemptions. The state of New York, to counterbalance some of the things that the federal government took away, the state of New York says, we're going to let you deduct all those things that the federal government says that you can't. Like if you're an over-the-road truck driver, office and home, all those kind of things are still deductible on New York State. So in essence, you're doing two completely different tax returns with two completely different sets of rules. The important thing is, though, on the state of New York, since they're being very liberal with their deductions, they have a tendency to be very scrutinizing and onerous in proving the deduction, so you want to make sure that you have all the receipts to prove.
And another sad thing is so many of my clients that I talk to, or your clients, or Chris's clients, or anybody's clients, they got rid of all of their, they didn't take care of their receipts anymore. They didn't pay
Because
attention
they
to their
didn't know,
mileage law,
right.
because they had heard the rumblings
But
in
of
the
course, you
media.
can go back and reconstruct your
Yes,
mileage,
yep,
right?
yep.
But the thing is, you want to make sure you do it, and now at the beginning of the tax season is a great time to do it,
That's right.
right?
Definitely.
Okay. Let's see, do we have any other questions right now?
What?
Okay, all right, let me talk about some of our offices. We have some offices that moved this year.
Yep, and I wanted to say that we have a fast cash advantage because the IRS is going to start accepting returns later this year, so we have a means for that, and that is if you need a fast cash refund option, we have those options. You want to talk about that, Chris?
It's a way where you can get your money within, they say 12 hours instead of waiting 2 to 3 weeks for the money, because again, the IRS doesn't give us timetables for refunds. So if
But
you
it
need
is a
your
loan.
money, but it is a loan.
But it is a loan.
There is a cost involved, and we
Right.
can go over that with you
Right.
when you come.
And then our offices, our corporate headquarters used to be on Niagara Falls Boulevard. That office is now a branch office.
Correct.
Our corporate headquarters is at 1890 Colvin Avenue, kind of by that blue airplane in Tonawanda. And so that's a major change. We also have a new office on Grand Island.
Right, we
Yeah.
moved to Grand Island, it's now corporately owned, on Whitehaven.
right? So that's a change in office. And then we also relocated to Wrights Corners, right?
Correct. And New
So, so those are the changes in offices, and I will tell you, when you go to our website at egtax.com, you can ask a tax question. There's all kinds of bells and whistles on there to help you with your own taxes if you have any questions. The most important thing is don't take for granted that the tax law changes won't affect you, because you're going to find as you watch our series of TV shows that even if you have very little income, you might have refunds coming from the federal government due to earned income credit and some of these changes in the tax law.
Don't talk to your neighbors.
Yeah,
Don't
they
get tax
aren't-
advice
they
from
aren't
your
tax
neighbors, your coworkers.
experts. That's right.
Call a tax professional and get the true answers.
That's exactly right.
I agree.
All right.
Agree. Make a phone call.
That's right. I'm Esther Golias, the tax lady from EG Tax. If you need the best tax help for the lowest fees, give EG Tax a call. Our phone number at corporate 632-7886. You can visit our website at egtax.com. Thanks for watching. We'll see you next week. Bye-bye.
New friends, new opportunities, new partners, EG Tax.
So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.